Yeah, cryptocurrency. I mean, this is an area we are focused on, and I think you ignore it at your peril. I mean, the stakes are exceptionally high. This is a really compelling technology. The blockchain technology that underlies it, but also sort of the associated the non-fungible tokens, the digital currencies that the central banks are likely to launch in the near term. So this is huge. I mean, we don't have a view on what Bitcoin is worth. We are slightly cautious, and there's a sort of speculative element there that makes us somewhat cautious. But where we are focused on is that underlying technology, and I guess the answer with banks, and it's something we are thinking about quite deeply, is to what extent is this a threat to the traditional banking system? And I think the answer there is yes, it is a threat, but it's also an opportunity. And I think it's one of the key aspects we're looking at is how banks are approaching it. The real hurdle, though, I think for all of this is really resolving that public policy element. What is the regulatory ground rules? And I think everyone is really waiting for that. And I know that probably presents a near-term threat for some of these assets, but we think ultimately that's going to be very, very positive. It's going to mean that once everyone knows the rules of the game, I think ultimately you're going to see very significant investment. I think this is going to become mainstream very, very quickly. Having said that, it's already starting to impact some of our companies. Gosh, I think all of them in their own right are interesting. I think from a financial analyst, I mean, clearly there's two parts that I'm most focused on is really, I guess, the payments platforms. I think to the extent that crypto can actually disintermediate the traditional payment systems, and to the extent that banks are involved and generating revenues, that is clearly a threat. But I guess ultimately it's going to be determined by the consumer. I think that what is the value proposition for a consumer? The fact that it's cheaper or you're not paying an interchange fee isn't really interesting for me as a consumer. I just want a secure transaction. And I think the traditional payment system, for all its ills, does offer a lot of very consumer-friendly aspects. So, if you pay with a Visa or MasterCard, for example, you can get chargeback facilities. There's fraud protection, et cetera, et cetera. So, instant payment is not always good when you can't get your money back. But again, that'd be one area. But the other one is the sort of so-called decentralized finance, the DeFi option, where you can actually get, a loan or insurance product and completely bypass the traditional banking market, and that clearly would be a direct threat to the banking system. But again, I think there's a huge amount of risk here, to the extent that potentially, if it starts to undermine sort of credit distribution within the economy through the traditional system, I think regulators will be very sensitive to that. Yeah, consumer staples is a focus sector for us at the moment, because it is actually lagging at the moment. But there's probably two key things that you need to understand when you're looking at staples at the moment. The first, and they're both, you could argue, are related to COVID and the impact of COVID and the sort of normalization post-COVID. And the first is, I guess, the normalization of the top line. So to the extent that we all went home and hibernated in lockdowns and ate too much and pantry loaded and bought a lot of toilet paper, et cetera, and chocolates. So obviously that was a good time for these companies. They're probably oversold, or they're definitely oversold. And there's a normalization, and I think the market's trying to understand what that looks like at the moment. We know that the comps are very tough, and we're still sort of working through that. But revenues are the outlook is relatively unclear. And the second is, again, related to COVID, is really these cost pressures. Obviously we're in a very inflationary environment. There's logistic issues, there's labor inflation, commodity inflation, and these companies, generally speaking, and it's a wide and diverse sector, but generally speaking, these companies have not been great at passing on prices and costs. So the one I'd call out is, again, food manufacturing, where again, historically this has not been an unhappy environment for them. Having said that, there's probably one particular area that we do like, which is the sort of cosmetic companies. So L'Oreal and Estee Lauder, we like both of them. At the moment we own Estee Lauder, but I think the primary driver there is really the premium skincare market. It's one of the few categories in consumer staples that is really growing year on year and really underpinned by that emerging middle class in Asia more broadly, emerging markets more broadly, but particularly in China. It's a phenomenal story. Then you've got the travel retail channel, which is in the process of opening up. And then you've got the added leg as cosmetics and fragrances, which are really driven by social occasions. As we go back to work, go back to restaurants, go back to nightclubs, people start buying fragrances again, and cosmetics. And then there's also an interesting dynamic in terms of e-commerce, where this is one of the few categories which is just what was winning before COVID, won through COVID because people sat at home and ordered things online, and is now winning after COVID. So if anything has been able to sort of power through, and it's been a really phenomenal growth story. And then Nestle is probably the one stock we would call out, which we think does have some degree of pricing power, perhaps not as much as the cosmetic companies, but certainly we feel I can manage that margin pressure very well. And that's mainly because they are now in high growth categories, primarily sort of coffee, premium pet care, nutrition. They've got a phenomenal JV with license agreement with Starbucks, which is going very, very well. So that's one company we do own and we are positive about.